You're listening to Confessions of a Bookkeeper, where we look at businesses through the eyes of their books. My name is Mark, your Chief Bookkeeping Officer, and I spent years cleaning up and reviewing some, let's say, interesting books. In today's episode, we're talking about questions we hear most often from med spa owners, especially those who operate under an MSO and PC structure. Almost every call starts the same way. We're a med spa, but our structure is a little different. And it's true, but the setup isn't unique. It's the same structure used in surgical centers, plastic surgery practices, ophthalmology offices. We've been doing MSO and PC bookkeeping for years, long before med spas became popular. So today, I want to walk through 15 questions med spa owners ask their bookkeeper and how we actually answer them. Question number 1. We're a med spa, but our structure is a little different. It always starts here, just like I said. The MSO PC model isn't new, but cash flow in this kind of setup can get tricky, and that's why it's important to have both entities treated like separate businesses. We understand what belongs in each set of books, how management fees flow, and how to track those due to and due from balances so the relationship between the two stays clean and reconcilable. Question number 2. Do you actually understand MSO and PC accounting though? Yes, for sure. At the base level, it's just accounting for two different companies. When you look at each entity in isolation, it's really a lot simpler. We handle them as separate, independent businesses and then tie them together where the management agreement says they should meet. Question number 3. What should be on the MSO books versus the PC books? Think of it like this. The MSO runs the business operations and the PC practices medicine. The MSA, your management services agreement, usually defines what goes where. Rent, marketing, administrative staff, and overhead likely are the MSO. Licensed providers and medical director fees, probably the PC. Medical supplies can go either way depending on whose EIN the vendor account is under, but again, the MSA is the rulebook. Question number 4. How is a management fee calculated? The management fee is always determined by your MSA. We don't need to see the agreement, but we do need to know how the fee is being calculated so we can reconcile it properly. Flat rate, percentage of revenue, hybrid, all of it is fine. Just make sure both sides understand the structure so those transfers are consistently calculated every month. Question number 5. Should each entity have its own payroll? Ideally, yes, both the MSO and the PC should have payroll, especially if they're a corporation. Admin and support staff are usually MSO, while licensed clinical staff are on the PC. That's pretty standard. The key is consistency in making sure that everyone's paid from the right company so the reporting stays clean and defensible. Question number 6. Do you integrate with our electronic medical record system, also known as an EMR? Typically we don't, unless you're running multiple locations or doing like 8 figures in revenue. Full EMR integration isn't worth the cost or complexity. Most EMRs can export simple reports showing your daily sales, prepayments, and deposits. We can use those to record clean cash basis revenue, simple, efficient, and accurate. Question number 7. Are we supposed to be cash or accrual basis? For most med spas, cash basis is perfectly fine. Once you're bringing in millions in revenue or start building out multiple locations, accrual might make more sense. But at that point, you'll likely have in-house accounting and a fractional CFO. So until then, we suggest to keep it straightforward. Question number 8. What's the right tax selection for our MSO entity? That's kind of a CPA conversation, but generally when your MSO becomes profitable or you anticipate profit, electing S-Corp status gives you more tools to manage your tax liability. Early on, when the MSO is still growing and not yet profitable, maybe there's no rush. A small caveat is you never really know when profitability will come, and getting ahead of it with strategic elections could make sense. Question number 9. How should we pay our medical director? Well, that's dictated by your MSA too. It might be a flat fee, a percentage of revenue, or even structured as rent or oversight compensation. We just need to know how it's calculated so we can reconcile it and avoid having to ask about it every month. Question number 10. Can you track vendor payments and medical supplies? Absolutely. We can build your chart of accounts around your vendors. If you want to track Galderma, Allergan, or compounding pharmacy spend separately, we can break that out. The goal is to make your P&L meaningful to you, but not overwhelming. Question number 11. Can we run everything through one credit card? This happens quite a lot, especially early on in a business's life. The question is, how do we account for that? If one entity pays for both, we'll record reimbursements as due to or due from balances. That way you always know what needs to be repaid and both books stay aligned, but eventually you would really need to use 2 credit cards. Question number 12. What reports will we receive each month? You'll receive a profit and loss and balance sheet for each entity. If your MSA ties the management fee to P&L results, we can structure the chart of accounts so you can easily verify that calculation yourself. Question number 13. How do we handle prepayments, membership, and packages? Those are like deferred revenue, technically liabilities because you've been paid for services not yet performed. Even on a cash basis system, we can track that from your EMR reports. Think of it as a light conversion to accrual accounting, enough to show you what's been earned versus what's still owed without overcomplicating your books. Question number 14. Do you work with our CPA or do you handle taxes yourselves? We don't file taxes, but we do coordinate with your CPA year round. They'll have accurate financials for planning throughout the year and a clear year-end package for tax prep or extensions. No surprises and no cleanup rush. Question number 15. What happens as we grow? More providers or more locations? That's when structure becomes crucial. We'll talk to you about whether it makes sense to use class or location accounting or to spin up new entities altogether. It's a conversation that should include your CPA, your business attorney, and us because the MSA, the tax strategy, and the bookkeeping, they all need to stay aligned as you scale. So those are the 15 questions MedSpa owners ask their bookkeepers. And honestly, they're the same ones we'd love to answer because every time we walk through them, it brings clarity to how the business actually works, where the money flows, and how the entities interact with each other, and what success looks like when the numbers finally start telling the story. So if you're running a MedSpa or planning to start one and want to make sure your structure, books, and reporting are built right from the beginning, visit chiefbookkeepingofficer.com.